Hello folks, welcome back to the channel. In today's video I want to introduce you to another very powerful institutional reference point known as the mitigation block. Remember yesterday we started discussing about institutional reference points and we've discussed an order block, which is also a very powerful institutional reference point. This is the video. If you have not watched that, you can simply go to my YouTube channel and watch it. Now we will discuss a mitigation block. Just like an order block, we also have two types of mitigation block. We have the bearish mitigation block and then we have the bullish mitigation block. They are very powerful. I'm going to show you how to spot them on a live chat, but let's start with discussing what a mitigation block is. Right here, remember I told you that institutional reference points are simply footprints that the institutions have left for us, or footprints that the institutions are looking up to take their possible trades, and we want to hide behind them to avoid incurring losses in our trades. So I'm going to show you how to spot them and then possible trade entries that you can spot using this kind of information. Let me delete everything right here and then I will get back to that drawing. I'm going to show you what a mitigation block is on a sketch, and then I'm going to go straight to the charts and then we are going to spot them right on our chart. So what is a mitigation block? Let me show you on a sketch. Let's have a market going up. This time around I'm going to start with the bearish mitigation block. If we have a chart going up like this and then had a retracement and then this time around push up, okay, and then had a failure swing, then this level came to this level and violated that level, came back to this place. Now remember I said an order block is that last bearish candle. This time around a bullish order block is that last bearish candle that was violated by that up candle. That is a bullish candle. Remember we are expecting that order block to have some difficulty in being violated right here, but this time around price came back and violated the order block, and we have seen a market shift around this level. The market has shifted around this level. So this is our mitigation block. We do not call it an order block this time around. We call it a mitigation block. So right here is our possible trade entry. Let me show you where we are expecting to enter our trade at this level. When price comes back to this level, we will expect to enter trades around this level. This entire movement is like an M shape. For pattern traders, you can look at this and say this is an M shape, and then you can take trades from that. So we are going to go to our chart and spot some of those on our live chart, and then we can see the possible levels of entry. And then we also have the bearish mitigation block. This time around it is in a form of a W. Let me take away everything right here and then I'm going to show you. This time around it is in a form of a W. Let me show you. If we have a movement like this and then we have something like this, then a failure swing. Remember I said a failure swing, and then we have price coming back to test the level. Now this is supposed to be a bearish order block. Remember I said this time around the last bullish candle that was violated by the downside candle is our bearish order block. This time around it has been violated, and then we had a market shift around this level, price coming back to test the level. So this is where we should expect a possible trade entry. When our price comes back to this level, we take our trade. So this is simply how to spot a mitigation block. So let's go to the charts and then I'm going to show you that, and then you can also go to your charts later and then spot some of these things and then practice over and over again. You will get used to it once you are able to spot them right now. So let's delete everything and go to our charts, and then I'm going to spot some of them for you. Let's check our charts. If we can see any, I'm going to actually show you how to spot them on a live chat. So right here I can see another one right here. So you can use this on any time frame, but remember you have to use institutional order flow to know what the institutions are doing, where their orders are. So right here is a mitigation block. Let me show you something very interesting here. We have a price move from this level to this level, and then we have price came back, and then we have a failure swing. Remember this is a failure swing, and then price came down to this level, and then we had a violation of this particular market structure around this level. So this particular candle is now our mitigation block. Let me show you. This red candle is our mitigation block. Okay, is our mitigation block. It used to be an order block, the last bearish candle that was violated upside, and then this time around it is our mitigation block. And then price came back to test it. Notice how these candles respected this particular mitigation block. So at this point is where we pull our trigger and enter our trade. You can see it is where we pull our trigger and enter our trade, and then we come down to this level. So this is how to spot a bearish mitigation block. Let's now continue to check whether we can see another mitigation block. You can see them in different places. Even on this chart, you can see a lot of them, and you can spot them. You can take trades with just this information. It is very powerful. Subsequently, when we finish discussing all the institutional reference points, you're going to see the beauty of this. Okay, guys, let's continue to check. And then let's see another mitigation block. Yes, I can see a mitigation block right here. Look at this. Price pushed to this level, came down, failure swing, and then we have another movement. Once it touches this last candle, let me show you this. You're going to see this very clearly. Let me delete everything. We have a price moving from this place, okay, to this level, came down, and then a failure swing, came back again, pushed to this level, and then it crashed down. This is the power of a mitigation block, guys. You can see it on every single chart. Let me expand it. This is your mitigation block, the last bearish candle that was traded to the downside. You can see price pushed through it to that level and then crashed down. We can see that once price entered this place, it crashed down. So we have a failure swing. Remember, it is always a failure swing. And then we saw price respecting that mitigation block. Let's find more of this. Let's try and find a bullish mitigation block this time around, not a bearish mitigation block again. Okay, let's find a bullish mitigation block, which is always in form of a W. Okay, I'm seeing something very interesting here. A failure swing. You can see this. Let me delete this guy. A failure swing from this level to this level. Okay, this is a failure swing, and then we had a market structure being violated at this point. You can see market structure being violated around this level. And then remember, I said we want to see that other block cannot hold this, and then look at it. Price came back direct to this point and then hit again to the upside. Notice how this particular order block was respected at this point. You can see price just touched it and then move up. Even in the future, it came back and touched it and could not do anything and then pushed up again. Look at it. A very good bullish mitigation block. Okay, you can see a lot of them. You can spot them even on this chart over and over and over and over again. You want to see a failure swing, and then you can take your trade. Look at it. The last bullish candle that was traded through, remember I said that is your mitigation block. It used to be your order block, but this time around it is your mitigation block, and we expect to take our trade to the upside. Let's try and see if we can find another one for the last time, and then we can close for this. Then the next class we'll discuss more and more of these, guys.